So ladies and gentlemen, welcome back to our YouTube channel. My name is Waqar. I'm one of the traders here at WWA Trading, and today I'll take you through a breakdown of Euro Jpy. Now this is a trade I entered myself personally on an intraday basis, and the reason why I chose to discuss this trade is because there's many lessons that can be picked up from this position here. We discussed a lot on our channel about the entry criteria of a trade, but we haven't yet discussed a lot on exit criteria. And I realized that this is the pitfall of many traders, where they'll enter amazing positions, amazing trades that reach 1 to 10, 1 to 20, 1 to 30, 40, 50 plus risk to reward. But what happens is the trade returns back to break even, and the trader himself has not capitalized anything from that position. So this is a little nugget that you can implement within your trading, and you should be able to see significant results. So without further ado, let's go straight to the charts and break this trade down. So this is the chart on Euro Jpy I was referring to. You can see this is the exact position, my entry, my SL, and that was the maximum height that the trade reached, 1 to 80. And this is the 1 to 26 risk to reward point where I secured significant volume. Now, why did I enter this trade? What gave me the confidence to enter this trade? Well, it was for a multitude of reasons. My personal confluences when I like to enter a trade. First thing I like to see is market structure and make sure I'm trading pro trend. Very rarely do I trade counter trend. Second thing I look for is valid supply and demand zones, and then I like to see lower time frame confirmations within them supply and demand zones. Now, if we take a look at the market structure of this Euro Jpy leading into the trade, we can see we had a low, high, higher low, higher high, higher low, higher high. So we were sitting within some bullish market structure. So obviously, first thing, I'm only going to be looking for buys. I'm going to be trying to trade pro trend. My main bias is bullish, and the main thing I'm going to look for is buys. Now, after I identified my structure, I want to break down my most recent impulse, and I want to find a valid, in this case I'm looking for buys, so a valid demand zone within this buy. So from this low to this high is my most recent structural point. So I want to break down this area and see where my demand zones are. Now, without even going into the lower time frames, I can already see from the price action within these wicks that we had two separate accumulations here. We had an accumulation play out here, and we had an accumulation play out here. Now this is the accumulation that gave the momentum to clear this high and form the new higher high. So I just want to see this accumulation in a bit more detail and see what I can find within there, and see if I can confirm this area as a strong demand zone. So I'm just going to go into replay mode, come back to this price action here, and drop down into the lower time frames to see what I can see. So if I switch to M1 here, you'll notice there's a few things that I've marked out that are worthy of pointing out and that are worthy of taking a look at. First thing is bullish order flow. You can see we had an imbalance here, it got filled in, had another imbalance between this wick and this wick, it gets filled in, had another imbalance here, it gets filled in. There wasn't an imbalance here, but another imbalance here that gets filled in. So we're consistently filling in imbalances, and we're consistently mitigating higher. So the first thing we can see here is we got bullish order flow. Second thing we can see is we had this set of equal lows here, equal lows, and then we had this FU candle. So we had liquidity sitting here, and this FU candle grabbed the liquidity that was sitting at this level here. And the third thing we can see is we had an accumulation play out here. Selling climax, ST, STB, spring, test, LPS, BU, LPS. Also we have the automatic rally and the sign of strength here as well. Now if you take a closer look at this, you can see that this accumulation also led to the new high being formed. So the M1 structure here was low, high, higher low, higher high, higher low, higher high, and then we had a BOS here. We cleared this low that made this high, it got cleared, and then what happened is, so obviously after this low was cleared, the market structure shifted bearish, but the accumulation gave the momentum to actually make the market structure bullish again. So we shifted to bullish market structure from this point here. So there's a lot of things confirming this as a strong demand zone. Number one, the bullish order flow. Number two, the equal lows in the FU candle. And number three, the M1 accumulation that led to a new M1 high being created. Now, typically in a scenario like this, I would class this whole accumulation area as my area of demand. Why have I refined it down to this small portion here? Well, it was because of this. On the second time frame, you can see we got equal lows here, and then we had this FU candle here, which I marked out as the LPS in terms of the accumulation. And when price returned to this LPS, it mitigated and then it continued higher. So in the area, in in the sense of this whole area being the POI, half the POI has already been mitigated. This has already been mitigated. The only unmitigated part left is below the LPS here. And if you, right now, this is too far back for me to jump down into the seconds time frame, but from this wick in the spring, you can tell if you were to drop down in the 30 seconds into the 15 seconds, there's definitely imbalances sitting within this range here. So this is my point of interest. Now, I don't have enough information yet to set a limit or anything of the like that. Instead, what I have to do is wait for price to return to this area and monitor how price action behaves when it returns to this area. So let's go into the H1 time frame and come back to when price returned to this area here. Press play and let the market play out. Okay, what we have here, the market taps into our demand zone here. Okay, the market comes back after a few days and it returns into our demand zone. Now, let's see if lower time frame gave us any entry criteria that we can utilize to get into this trade. If I go to, I'm going to start off actually at the M5 time frame to show you what happens here. If you look at the M5 time frame here, you can see when price returned to this area, once again, what did it do? It formed relative equal lows. This point here and these points here. It formed relative equal lows. It built liquidity above our demand zone, and then it tapped into our demand zone, and and that was the FU candle of these equal lows here. Now, also from looking at these wicks here, I can see that the market also accumulated within this range. So let's just drop down to the M1 time frame and see this accumulation play out and what other information we can pick up. If you look at the M1 price action leading into our demand zone, you can see the market structure itself starting off was bearish. You had a high which led to a low, then you had a lower high, lower low, lower high, lower low, lower high, lower low. Then you had a BOS, market structure shifted bearish, and also in terms of an accumulation, you can see I got my preliminary supply, semi-climax, ST, STB, spring, and also automatic rally and sign of strength. What I don't have yet is my test, BULPS, etc., so on and so forth. Also in terms of market structure, if I was to look here, this is the low that caused the BOS and went on to create this high here. So this low went on to create this high here. Now this low here did not create a new high, so it's not a significant structural point. So if the market clears this low here, I'm not going to say the market has shifted bearish. For me, the market is still bullish, and this is my extreme level. This is the structural level of any significance to me. Now I got this imbalance within the structural level here, and now I got all of my confirmations stacking up within each other. I got my market structure being bullish, I got my strong demand zone, and also within that I got when price returned there, I got lower time frame confirmation with once again market structure shifting bullish. So I'm going to set a limit here at the close of this imbalance, and I can put my stop loss below this low here. Now when price returns into this area, you can see the first thing it does, it taps in and then it returns back and it gives you a little bit of drawdown. Now a lot of people, what they would have done upon this point here is they would have looked at this reaction here, and probably on the M5 time frame this looks like a good candle and it looks like a strong reaction. A lot of people would have potentially broken even on their trade at this point here. Then what happens, the market returns here and takes them out of the trade and then continues to go in their favorite direction. With me personally, when it comes to breaking even, I prefer to break even in terms of market structure. So once this high is cleared, okay, once we had a new higher high formed, then I'll be safe to break even on my trade. So that's the first thing I'm going to wait for. I'm not going to break even until a new high has been formed. Let the market play out, do its thing here. Finally, at this point, the market has cleared the previous high. It's cleared that high. Now I can look to break even. Now I've got further confluence inside my bias and I can break even on this position. Now let's see how this trade plays out. Go into the H1 time frame. And again, the first point where I'm going to look to take significant volume off is the structural point. At this point here, I'm going to remove 50% volume. Why? The market is bullish. The only thing we know for sure is we're going to create a higher high. Now, are we going to create a higher high by 1 pip, or are we going to create a higher high by 100 pips? We can never be sure. So I'm going to have a fixed target here where 50% of my volume comes off. So let the market play out, do its thing. There we go. Now that the market has reached our previous high, we can remove 50% of the volume here. Now you can do this in two ways. You can either set an alert here, and when price taps in, you can re-evaluate price action and close off 50% volume. Or you can have, as soon as you enter the trade, you split your risk between two entries. One entry has half the lot with a fixed target, and the other entry has half the lot size with no fixed target. And upon this point here, it'll automatically take you out of the trade. I prefer to have half a position with a fixed target, only because sometimes what happens is the market comes up, and just say I got an alert sitting at my previous structural point, the market climbs up, taps into my point. Now by the time my alert has been triggered and I open up my MT4 to take off my volume, price has already retraced a significant amount. Then I lose out on a significant amount of risk to reward, and this can happen quite a lot. So just to avoid that, I like to have the process automated, that as soon as it's tapped this price, 50% volume comes off. Okay, continuing on. Now where did I remove the rest of the volume? Well, 30% got removed at a structural point. So let me just get rid of these drawings. 50% got removed at a structural point, then 30% got removed at the relevant supply zone. So if I switch to the daily time frame for a second, what can we see when you take a look at the daily price action here? In terms of market structure, I got a high, I got a low, I got a lower high, I got a lower low, and then remember, this isn't a lower low, so it's not a significant point. So this high did not create a low, so we're not going to say the market shifted bullish when this high was cleared out. This is the significant high that created the relevant low, or the most recent low. So all of this inside is negligible. Now, this high went on to create this low here. Okay, so this is my most recent structural leg in terms of the daily, or my most significant structural leg. All of this price action here, again, we're not really too bothered by it, simply because we've tapped past it now. Everything here has been mitigated. If we take a closer look at this price action here, we can see we had a distribution, and this distribution led to the new low being formed. And in terms of the daily time frame, this is an IFC, institutionally funded candle, and there's an imbalance here, and this imbalance can be tapped into, and it's a relevant supply zone that's left unmitigated. So I'm going to monitor price action once price returns to this supply zone and remove 30% volume. So after price reaches this supply zone, I still have 20% volume left, but by the time it reaches there, I'm going to remove 30% volume. So let the market do its thing. Okay, it taps into here and I remove 30% volume. Now when do I remove the final 20%? Well, I'm going to hold on to that 20% until I can enter a trade in the opposite direction. So in this case here that I'm buying, I'm going to hold on to the final 20% volume until I can enter a valid sell and break even on that sell. So what I'm doing is I'm leveraging that 20% remaining volume as a hedge. Okay, and if I make a mistake in my analysis and I take a loss, then the hedge will play out, and the 20% volume that I have left is going to make up for any losses that will take place, that I will take trying to get into a sell. So if you want a better way to understand this, you can look at this drawing here. Just say I entered a position here. The red is the current market structure. I'm sitting within bullish market structure, and I enter a buy at this demand zone here. Okay, at the structural point, I'm going to remove 50% volume. Okay, at the structural point, and then I look at the market structure coming into my current market structure. So this might be my H4, what to call it, higher highs and higher lows. And in terms of the daily time frame, I've got this massive bearish impulse here. I'm going to mark out any relevant supply zones that I have here. I'm going to monitor them supply zones. Once price reaches a significant supply zone, I can set an alert and take off 30% volume. And the final 20% remaining volume I have is as soon as I can get into a clean sell and break even on that sell. So this supply zone, market might come into this supply zone, give this reaction here, maybe a mini distribution on a smaller time frame, and I enter on the UTAD or the test of the UTAD. Once I've broken even on that position, I can close off the final 20% volume that I have remaining from these buys here. With that, I'm going to end off today's video. Hopefully you guys took some value from the video, and if you guys have any questions, you can leave them in the comment section. Over the next few days, I'll try to answer as many questions as I can in the comment section. And if you want more information regarding our education, there's a link in the description below, and you can book in a one-to-one call with our student success coach, where you can ask for further information regarding our bootcamp. But thank you for plugging in, and I'll see you guys in the next video.